Okay, good afternoon, everybody. Today, of course, is Monday, November 25th. Greetings, and I thank you, and I applaud you for being here on the webinar today. Thank you very much for being here. And before I begin, I just want to do a quick shout out, wish everybody a very happy and healthy Thanksgiving. I just want to make sure everything is working. If you can see a daily chart of the S&P 500, could you please type in SPX in the question box? Okay, good. I've been having some trouble with the system lately, and I think I have all the kinks worked out. So I will apologize in advance if for some reason we do get cut off. However, I don't expect that. Anyway, if you'd be so kind as to type in where you're from, I really would appreciate it. Oh, United Kingdom. Welcome. James, welcome all the way from across the pond. I know it's difficult too, by the way, to get on some of these webinars because of the time difference. BC, Canada. Great, welcome. Welcome, David. I appreciate you being here. And typically I do a webinar once a week, usually in the evenings, 9 o'clock Eastern time. So I know it's difficult for my members from overseas to attend, but all webinars are recorded, so you do have the availability to listen to the recording the following week. Anyway, thank you very much for sharing that with us. I'm actually in New Jersey, and I'm suffering from a little cold, having attended the Giants game last night, so I apologize if I'm a little nasally. It was just brutally cold in the Meadowlands. Okay, a couple of things I want to go over before we start. Just real quickly, this is a standard disclaimer that I'm required to show. And I think the real key here is this: trading involves risk. Obviously, you do not trade with money you cannot afford to lose, okay? So I'm going to jump right in. First of all, my name is Barry Boswell. I'm the creator, the editor of the Fusion Trading System. I've been trading for well over 20 years now. And just as a brief history here, I got involved in this business about 3 years ago. I was essentially recruited by a marketing company to run a service for them. About a year and a half ago, I moved away from that company and set the service up on my own. Services actually managed, collections are managed through ClickBank, which is a prominent online payment processor. And I continue to operate the service since April of 2010. And I'm going to show you, as I said in the email that went out, inviting you to this webinar, I'm going to run through a quick review of the members area, show you what the members area looks like, what's in there, and then I'm going to demonstrate a few, I'm really going to show you a few trades, what I like to do, and explain to you how I review the overall market. And again, I don't know if everybody is on my newsletter list. Is anybody not on my newsletter list? Every Friday I put out a free newsletter, and in there I discuss certain levels in the S&P 500. And I'm going to show you in a little bit how members are able to benefit off of that information and how strategically, quite frankly, you'll be shocked at how strategic it becomes involved in the market. But anyway, back to the members story. I'm logged into the members area right now, and this is the page that comes up first when you log in. And there's a couple of things that I do want to show you. For example, I have all trade alerts that go out and are issued are posted in the members area. Okay, and then I have a section here called Close Trade by Year. So for example, if I boot up that category, all the trades that are closed out are reported on a spreadsheet. So, for example, for tracking purposes, I assume $10,000 is invested per deal. Now, it's not necessary that that amount has to be invested, and obviously, it's not going to be a set amount per deal. All right. However, as you scroll down the sheet, you'll see that the actual return per deal is 8.65%. The holding period averages 18 weeks. And when you annualize all of this, right now it's averaging over 20% a month. Now you'll see here that a lot of these trades, for example, U.S. Steel here, this is a 4% return. It was held a week and a half. Here's a deal, CNO, we did at the beginning of the year, was held for 1 week. Okay. A lot of these deals are shorter term trades. Here's VHC. This was held 0.8 weeks, so it was held for 4 days. In 4 days, we made a 4.7% return. And you'll see I've done VHC a number of times. It was a 9.5% return. It was held for 7.5 weeks. Here's one, 0.2 weeks, which means it was held for 2 days. And in that 2-day period, we earned a 5.5% return. And then so on and so forth. Here's another return down here on VHC. We just closed that out a week ago, earning 6% in a week and a half. Okay. The other thing I want to show you is this. I do a market review at the beginning of the year. And here's the annual review, and you'll see it goes back to, actually goes back to 2010, starting in the year 2010, following up right into this year. And what I wanted to point out here is simply this. This was done, posted, you can see January 3rd, 2013. And if you click on the file, it'll bring up the actual PowerPoint. And again, here's the annual review. Now, what I wanted to point out here was simply this. If you scroll down this report, okay, this was my annual projection, okay, done in January of this year. I projected a top in the market anywhere from 1704 to 1781. A top anywhere from June to November. Okay, now, let's go to a weekly chart of the S&P 500. If you look here, the S&P, we just hit a high today of 1808.10, all right? And I was predicting at the beginning of the year a high of, on the upper end, around 1781. Now, what makes this rather unique here is the fact that if you look over here at the beginning of the year, you can see we were trading under 1,500, okay? And when I pointed this out to my members on a recent webinar, you know, a lot of guys were shocked, okay? They were shocked at the beginning of the year that I could predict out to a top of almost 1,800 when we were trading around 1,450. So when you look back in hindsight, obviously hindsight's a wonderful thing, but, you know, we don't need to deal with hindsight. We need to deal with foresight when we deal with the market, okay? We need to have a set of parameters to be able to understand where the market can possibly go and where the market can possibly find resistance and support. And it becomes very critical to understanding the overall temperature of the market. And that's why a lot of people have troubles, you know, trying to beat the market, if you will. Just a couple of other things I want to point out real quickly. Again, we always have an open position report. I also provide 2 price bar scans based on weekly price bars, okay? One's the double inside bar formation, which can invariably lead to some very explosive moves in the market. And then I also provide a weekly 3-bar reversal, which again is another very powerful price bar formation for the S&P for any price chart. And again, it's based on weekly price bars, which are stronger than daily price bars. Okay. Now, I also provide an education section. And again, understand something, that the information I share, you're free to use in any form or fashion that you'd like. Okay, and I'll show you what I mean in a few minutes about that, because I have some members who utilize certain aspects of the information and trade it very actively, and then I have others that trade based on other aspects of what I provide, like the 3-bar reversals. Okay, just real quickly though, the other thing I wanted to show here was this, the educational part. I provide a guide as well as complete videos, all right, in terms of how to understand my trade style. Okay, and here are all the videos you get. Okay, there's a first one here is trend determination, and most videos are accompanied by PowerPoints or a handout, whether it be a PDF or a PowerPoint. Chart reading using multiple time frames, the 3-bar reversal pattern, how to trade it, and then various option techniques and strategies. Okay, now I don't get too terribly complicated when it comes to option strategies, all right, but I will sell options, and I think it's important that people learn how to do that, because you're always collecting a profit when you sell options, and time is on your side. So I explain some of the option techniques and strategies here, and then I get into event trading, okay? And as I said before, I do a live webinar once a week, and all webinar recordings are posted. So if I click on this section, pardon me, okay. Boy, my connection is very slow here. Let me see here. Okay, here's the webinar schedule. The current schedule is always posted. This is our webinar for today. I'm sorry, the webinar for last week. And then again, as I said, the recordings are all posted under the webinar recording section, along with a PowerPoint of all the handouts that I discussed that evening. And I started adding that in because I know people who don't have an opportunity to listen live, they can follow along right with the handout. And you can also download the recording. So I just noticed here, no, we don't have the handout posted for last week, and I'll have to get that updated. Okay, and then down here towards the bottom, I have the bonus section. Okay, for example, I have Friday trade strategies and recordings. There's 2 recordings that I did pertaining to that, and then I discussed the whole corporate buyback scenario. Now, it's very interesting because if you look, this is the actual website, Fusion Trading System website, and if you scroll down here to the bottom, it discusses that Friday trade strategies, okay? There's actually 2 webinars now posted there. And it was very interesting because I'm going to read from it here. It says one member went on, the very next day, one member went on to make $933 in pure profits on a $513 investment. So he made almost 200% return in one day based on a trade strategy that I share in the Friday trade strategy videos. And just to give you an idea, this was his actual trade. Okay, he came in on a Friday. He bought LinkedIn, bought some call options on LinkedIn, paid $1.71. He ended up selling them for $4.79. All right, so he was in the trade about 6 hours. He made $311 per contract, and he had 3 of them. And, you know, as you can see down here, he says, I wished I had mortgaged my house for this trade, but only had 3 contracts. Still a nice trade, and I appreciate your work in presenting the technique last night. So literally, I put this webinar, it was a special webinar I held to discuss these techniques and strategies. Literally, the next day he went out and made almost $1,000 in 6 hours. And I know he's gone on to do even more trades of that nature. Okay, so anyway, this is your this is the members area. And if there's any questions, you can shoot them on through. If not, I'm going to move right on. Now, again, I also provide active trade alerts. Okay, so all trade alerts are posted. So it's all available to the members. And they're all posted in the members area as well. Okay. Okay. Moving along here, here's what I wanted to go over. This is a actual handout from my November 6th, 2013 webinar. Okay, and I get into discussing the interest rates and where support resistance is on the TLT. And as you may or may not know, the TLT is the instrument. Yeah, good question. Are the alerts text on cell phone? Yes, you can be set up to receive text alerts via cell phone. They're emailed and they're actually sent via text. And the instructions are right here. If you go in here to email setup, it'll explain how to, you know, how to get set up right here. Twitter setups and email setups. So everything is delivered via email as well as a text. And again, here's the TLT. This is the actual TLT from today. It was up 30 cents. Okay, going back to the presentation, I'm looking at specific support resistance levels on the TLT. Okay, as a matter of fact, we did close out a long call position on the TLT. We bought some calls in here. I believe we made about 40% in about a week on that trade. And then as you can see, the TLT started to head back down. And now it's kind of kicking back up here. Now the TLT is the instrument. TLT, as the TLT goes up, interest rates go down. So the TLT runs opposite the interest rates. And again, it's very important because, by the way, one of the things I do like to do is I share how you can track the TLT and then trade. You can actually swing trade some of the higher yielding stocks based upon pivots in the interest rates. Okay, and I don't want to go in too in-depthly into this, but WHX happens to be a lower priced, high yielding trust. Okay, and as you can see here, you know, if you went in here and bought this thing about four and change, it ultimately peaked here less than a month later, about a month later, just under $6. So even if you're swing trading this, there can be some decent profits utilizing that tactic. Excuse me. And here's another corporation that's a high-yielding. This is actually a business development corporation that pays, I believe, about 11 cents per month dividend. Okay, and again, you know, if you can time this for swing trading purposes, it could be fairly lucrative. You can see here, just looking at the chart, there's probably, you know, 3 different swings here where, you know, you could have easily earned, you know, 10%, a little bit more than 10% in a very short period of time. In addition, to the dividend that's being paid. So that's a tactic that I do like and I do share. And I have members that take advantage of that, by the way. At any rate, going back to this PowerPoint, I'm going to go back, and again, you know, I'll ask the question again, is anybody not on my newsletter list? Because, as I said, in the newsletter, I actually share specific price levels in the S&P 500, okay? And, you know, obviously, I'm not giving you the trigger as to what's going to make those levels active, if you will, okay? You know, I obviously have to reserve that from my members who pay me, all right? But I'm going to show you exactly tonight, you know, the different levels that I'm currently looking at, and then how you can utilize this information. But before I do that, if we take a look at this chart, this is a chart of the Dow Jones Industrial Average. It's a daily chart, okay? I'm sorry. It's a monthly chart, okay? Now this shows the high way back in '07, and then when the market crashed. This is the major bottom back in March 9th of 2009. And you know, if you had been trading during this period, I mean, you obviously are well aware of the pain that was being made during this time. You know, this was the direct result of the mortgage collapse and the real estate fiasco, and you know, the government being forced to step in with billions of dollars of TARP money to support the credit markets. So I'm sure if you were trading then, you know, you're well aware of, you know, the impending disaster that was going on during this time period. Of course, we had the collapse of Lehman, we had the collapse of Bear Stearns. There were some really radical things going on here in the financial markets. We also had a money market. There was one money market company, I believe out of Boston, where their value fell below par value. So there was total disruption in the markets. And of course, then the FDIC came in and raised their insurance to try to stabilize the markets. That was another vehicle they used, in addition to all the funding that was thrown at the markets, which is obviously continuing today in the form of Fed bailouts. But here's something I want to point out, because you may not be aware of this. It was very interesting because I had been calling for a top back in April of 2010. And the reason was this. If you measure this range here, okay, down to there, this is the measurement of that range. If I use a 61.8% level, which is a Fibonacci number, and again, I'm not going to get involved with explaining exactly why you would use that, but it's a Fibonacci ratio, and if you measure that using that Fibonacci ratio applied to the whole swing, it comes to 4,776. If I add that to that low right here, it comes to 11,246. Now that's where I expected a reversal in the market to occur. And if you can see this here, you may not be able to see it clearly, but the high that was hit in April of 2010 was 11,258. Virtually 12 points above that projected number, which, by the way, was known after here. Once the high of that bar was taken out, you can make that projection. And it was accurate to within 12 points, okay, on a swing of like 5,000 points. So it shows you how accurate this stuff can get. Now, if you were in the markets back in April of 2010, you may recall that the following month was when the flash crash occurred. That's when the Dow had a 1,000-point intraday range. and it occurred right after bouncing off that top there. Okay, so at any rate, that's why it pays to be aware of these type of long-term projections. Okay, now, this is the S&P. This happens to be a 60-minute view of the S&P 500. Okay, the major levels I'm looking at are right here: 1812, 1731, and 1750. This level here happens to be a confirming line. Okay, so what I'm looking for is the price to close above this number to hit the next objective. Okay, now this is a very key level in the market, 1812. Okay, and as I've been saying, I really don't expect the S&P to get through that on the first shot. And it was interesting because today we got to 1818 and then we pull back. Okay, and it's a very significant level in the market, to the point where if we get through that, we're definitely going higher. Okay, as I said, a failure would not be unexpected here. Now, the reason you need to understand these levels is because you don't want to start loading the boat, right? If you know there's a significant level right here and we're coming up against it, you know, does it make sense to really start adding longs to the market? Well, I would say no, okay? And you'd probably be very careful about what positions you want to initiate. Okay, you'd be better off waiting to see if the market can take that out and then get long the market. Now, the question is, you know, how can you use this type of information that I share, okay, to your benefit? And I'll share with you just a recent testimonial I got. Here's a gentleman sent me this on the 14th. So this is just about 2 weeks ago. He went and he bought the SPY calls. Okay. And again, what's very clear here, which was very nice of him, he actually explained why he did it. He says he bought it about 2 weeks ago after the SPY had 2 closes above the confirming price. The SPX target was 1787.50. I paid 78 cents for it then. Never mind that he could have paid 30 cents for it last week. He sold these calls for $1.28. So he made a 64% profit in a little over 2 weeks. So if I go back to a daily chart, I'll show you where he initiated his position. He put it on 11:15. Hang on one sec. He put them on about October 31st, and he sold them the 13th. So he was in here about right in here, and then he sold them after it spiked up to the objective. So you can see this is about a 2-week trade, and he was able to make 64% return utilizing that information. Okay, and that's what I try to do. I try to share information that you can benefit from. So I appreciate him for actually sharing his results with them. And by the way, I didn't ask him to do that. You know, and actually he was on the webinar last week, and he said that that was the 3rd trade in a row that he was successfully had made money on options on the SPY just based on these numbers. Now, this was a different gentleman who used a little bit different tactic, but nonetheless, utilizing the same information, okay, that I share on the overall market. And, you know, I had asked him to share his details with me. You know, he sent me an email, said, yeah, I made some money, closed out some profits. But here's the thing, his trades were a little bit more complicated than the other individual who just bought a call and then ultimately sold it when it rose in value. What this gentleman was doing was buying a longer-term call and then selling shorter-term calls against it, okay? So he was basically doing a calendar spread. But the real upshot of it is here. He went in, he started with 7 contracts. It cost him $1,900. He ended up bringing in 5,110. So he had an ROI of 167%. And this was a little bit longer term holding period. He first initiated the position in September. Middle of September, he sold out, finally closed out the position about the middle of November. So it was about a 2-month trade, and he earned 167%, which, you know, works out to about 82 and change percent per month. So again, the point here is that he was utilizing, and he was doing that trade just based on these, you know, price objectives that I share. Okay. Now the VIX, by the way, this is incorrect. The VIX didn't do a 1-for-4 reverse split. The VXX did. Okay, but again, I use the same approach with the VIX, and the VIX helps us to time where the market can turn. Oh, and then here, it happened on this webinar, I received another email from this member who did a Friday trade. He did a Friday trade on First Solar. So here's his email, and you'll see it's very interesting because what he did was he went in, they reported earnings Thursday, October 31st. He went in the morning, okay, and put on a bull put spread. So you can see how he did it. He bought the 53.50 put for 12 cents, and he sold the 55.50 for 47 cents. So he got a net credit of 37 cents per contract. And then the trade, both options expired worthless. And you can see as he makes a point here, he said the stock never dropped below the 57.50 during the day, and his upper end strike that he sold was $57. So on 5 contracts, he made $175. Now, here's the important thing. He had a $2 spread here. So his risk was $200 per contract, or $200 per spread. Excuse me, $200 per spread was his risk. He brought in $35 per contract, okay? So his rate of return was in essence 17.5%. And you get that by taking the $35 divided by the $200. So it's basically a 17.5% return in one day based upon the Friday trade strategies that I share. And here's some of the reason we did this, okay? This is First Solar. You can see it gapped up at the earnings. This is the first 30-minute bar. It had taken out the high of the first 30-minute bar, okay, which we expected a continuation. All right, and then you can see here, this was his credit, 35 cents. He had a $2 risk on the option difference. And as you can see here from this chart, the lowest he got was 57.41 during the intraday session. And he was at 57. And I guarantee you that this put that he sold for 47, come 1:30, this thing was probably devalued markedly, okay, because the expiration was that day. And again, here's his risk, okay? What's the risk? Well, it's the difference between the strikes, which is $2, times 100 times 5 is 1,000. His net risk is really 8 1/4. And again, this is on a 5 lot. And I know he didn't do a 5. Yeah, he did do a 5 lot. So what's the return? Here it is, your 17.5% for one day. And these were some call options and the movement of some call options during the day. You can see when it dropped, these were down to 50 cents here, certainly under $1, and they peaked up to about $1.50. Now again, you may not have the ability to trade intraday. Okay, some people do, some people don't. This particular member has the ability to follow the markets. And as you can see here, it's a very small intraday move post-earnings, okay? The stock went from a low here of 54 up to 59, so it's about a $5 range, okay? And you can see the effect here on the one, this was the 58 call, okay? And again, here's a trade, if you bought in this area, you got more than a double. You probably easily got a double if you got in here somewhere. Here's a 59 call, all right, under 40 cents, ultimately peaked about $1. So, these moves happen, okay? And, I can show and demonstrate over and over, moves that make this look pale in comparison, okay? I'm talking about moves that go from 40 cents to like, $6, $7. And this does happen. But anyway, this was a actual handout from a webinar that I did, so it gives you a flavor for what I discuss on the webinars. Now, in terms of strategies, okay, what I really like is to do a lot of covered calls, especially on weeklies, especially on stocks that have weekly options, all right? For example, if you look at a stock like CLF, they have weekly options, okay? Or U.S. Steel. And what you want to be able to do is go in there, and that's how I'm able to kind of churn the account with profits, okay? The other benefit of doing this is that if you are not assigned, you have the ability to go back in and sell more options, okay? So now you can go back to the well, collect more premium. Okay, and if you are assigned, then so be it, okay? You can go back in and do the stock again on weakness. I mean, pertinent happens to be one that does have weeklies as well, okay? CLF is one that has weeklies. So what we're looking for is a cash collection vehicle, as well as being in a position where hopefully we're capturing some longer-term gains through a longer-term hold period. Okay. And if we look, if I go back to the closed trade report, okay, and we look at this, and you see, like, for example, ABX, we held that deal for 2 weeks. Now, that was a swing trade. We actually didn't sell options on it. I believe we bought it, I think we bought it up in this area and just traded it up, okay, and closed it out. As you can see, this was almost a 15% return for 2 weeks. This Unipixel, there were 2 trades on that stock. All right, one was almost an 18% return for 2.5 weeks. These were weekly covered calls. VHC, this was a weekly covered call. Okay, here's the TLT position. It was almost a 32% gain for a week and a half. Okay. All right, that's what I wanted to show you guys, and give you a flavor for kind of what I do. Now, just share one other thing with you. Okay. This was a member who sent me this last year. As I said, I share a number of different tactics and strategies, and I recognize that everybody has a different time constraint. Everybody has a different focus, okay? For example, you may not even look at the 3-bar reversals, okay, even though they're a very powerful price formation, all right? But I had this particular member last year send me this email, okay? And you can see what he did, okay? He went in and he said, look, he went through 2 weeks of trading from 7.2 to 7.13 using the 3-bar reversal. And again, I have a video that explains how to trade the price pattern and the price bar. But here's the thing that's very unique. He closed out 19 trades in a 2-week period with a profit of almost $509. Now, again, what's important here is that he only did this with either 100 shares or just one contract, all right? So, think if he had doubled or tripled the size, what it could be. Now, here's where it gets very interesting. He says there were a total of 13 winning trades averaging $82.58. There were 6 losing trades averaging 94.13. He says, as you can see, a 3-bar trade is over 70% win and less than a 30% loss, with the average win versus loss being within 15% of each other. Thanks for all your help, and if you'd like any of the details, I'll be glad to share them with you or your members. Okay, now, again, this is something that he did, just taking one facet of this membership and actively trading it. Now, I can tell you this, that I know he mentions here he made almost $508. Now, what he doesn't mention here is that there was one particular deal that he was in, because he had sent me an email asking me for my opinion on some of the deals that he did. Was he in at the right entry? Did it look like it made sense to me? And there was one particular deal that he traded, and I know when I responded back to him, I said, well, I really hope you're still holding this particular trade, because I really believe the stock's got more legs, and it's probably going to continue up. Well, he did email me back. He says, yes, I'm still sitting with that stock. And about a week later, the stock was taken over. So if I remember correctly, it rose about $13 in value. So if he had another 100, I'm assuming he had 100 shares of it. If he had 100 shares, he picked up another roughly $1,300 in addition to that $509. So, basically in a 2-week period, he was probably up about $2,000. So he had some nice results. Now, I'll show you. Here's the email that goes out. It goes out every Monday. And these are the, here's a couple of 3-bar reversals right here. And Tuesday morning happens to be one of them. Now, again, there's some specific techniques where you can go in here and actually actively trade these. And when I trade them, I'm looking for a scalp trade. So I'm looking to go in there. I have certain price objectives that are looking to be achieved. And once these levels get achieved, then I'm pulling the trade off the table and booking a profit. So at any rate, that's another facet of the membership. Okay, and again, as I said before, and I can't stress this enough, of all the information I share, you can decide for yourself what's the most suited for you. I mean, obviously, if you're holding down a full-time job, it might be very difficult to employ some of these Friday trade tactics, okay? If you have time on Friday, well, then, yes, you can go in there and start to get a feel for how some of these trades set up. I mean, they can be incredibly lucrative in a short period of time. As a matter of fact, I just closed out Deere last week. Intraday, it wasn't intraday. I bought some calls here on Deere last Thursday. I sold them Friday, and I doubled my money. So I'm in and I'm out, and I'm flat. And that can, and that's a small trade, okay? Some of these, as I mentioned before, some of these moves can be pretty shocking, shocking to the point where you would never expect to see those type of returns. It's almost illegal to have those kind of returns. Can I guarantee that? No, No, it's dependent upon the market. It's dependent upon the individual stock. Okay. Okay, now I also have a section here for Q&A. And the Q&A is where if there's a question or you have any questions, you can contact me through the members area, okay? And then I will respond to that question and post it publicly, all right? And it benefits all members. I mean, it becomes a learning tool as well. You know, here it just happens. Here's a gentleman who had a question on the 3-bar reversal and how to enter. He was a little unclear, and you know, I go through a whole explanation of how to, you know, what you're looking for, and so on and so forth. And I also have my direct email. You know, it's in the webinar handout, so you know, emails can contact members can contact me directly. Okay. All right, so at this point, what I do want to do is open it up to questions, if you have any questions. Even if it's on a stock you're currently looking at, I really don't mind sharing my opinion. Workday's up 560 after hours. They reported this afternoon. TJX. Wow. Okay, look at TJX here. This has obviously been a very strong company. You know when they report? I know Home Depot reports this week. Just so everybody knows, I had somebody type in TJX and Home Depot. They did on the 19th. TJX? Yeah, okay. Thank you. You know, this is obviously a very, very strong stock. All right. And again, I use a very simple analysis. All right. I use a 50 and a 200. And you can see the 50 here, and this is the 200. All right, so the stock has been in a really, really strong uptrend. Now, in case you're kind of wondering what this blue line is, this is a Bollinger Band setting, okay? What I call extreme Bollinger Band, all right? And the reason it's extreme is because, let me erase it so we can see it. It's a 253-day setting with a 2.576 standard deviation. Now, when you use those settings, it basically represents 99.9% of all the price action, which means that the price should be contained within those bands. Now, it also means something else. It also means that if we get a movement outside those bands, it's showing a real extreme, okay? For example, you can see here on the weekly chart how TGX got above it, it ran above it, finally came back into it, and then it proceeded to run again. And now we're getting right back up to the top band. And you can see on the daily how it's back up to the top band. So this is showing unusual strength. It's just you didn't see higher prices on a monthly. I don't know. This is the monthly. Here's your monthly on TJX. I mean, this thing has been making new highs. And the retail continues to make new highs. See, I get concerned when I see a stock getting to such an overbought condition. Okay, and what happens is I would want to, if I own this stock, I'd be trading it with a pretty tight stop loss. You know, here's Home Depot. Did they report? I thought they did. I thought they report this week. Oh no, I'm sorry. You're right. They did report last week, and Lowe's reported too, I believe. And Lowe's got hit. Yeah, they gapped up and now they pulled back. I mean, look, if we look at Home Depot versus TJX here, now Home Depot on a monthly basis is really overbought as well. Yeah, as I said, I mean, I get a little concerned if I see price getting above that top extreme band setting. Obviously it can continue to run. I mean, this is just showing unusual strength when it stays way above that. Okay, but I'd be in there on a very tight stop. On any sign of trouble, I'd blow and take my profits if I'm long. And I'll give you a classic example of this. It was Apple. Okay, I mean, might be difficult to see on your chart here. Let me pull off these EMAs so you can see it. Okay. All right, this is your extreme Bollinger, your top band, okay? Now you can see Apple had virtually run for like 5 years above that top band. Okay, pull back to within it. And again, here's the major bottom. Apple was at $75 when it bottomed back in March of 2009. Ran up to almost $700 here, okay? And, again, was way above that top band. And then naturally it pulled back into within the bands. Dropped like $300 off of that top. And if anybody remembers, I mean, this is when, it was interesting because when Apple was running up to the $700 level, that's when I remember everybody was saying Apple's going to go to 1,000. And, lo and behold, it pulls back and it drops about $300 off that. And now it's coming back up and, kind of going to probably, I don't know if it's going to break through, but the key right now is, if you can see, I don't know if you can see it, but Apple today is at 523. The top band is 517. All right, so it's kind of struggling to get through that band again. That top band. Okay, is it time to sell the January 14th option to close the position? Are you talking about on TJX? Yeah, okay. Look, I don't know your specific trade. I really can't give you specific advice because I'm not a registered investment advisor. Okay, but here's what I do. All right. I'll go to a 60-minute chart, and I'll start tracking the stock on a short-term basis to see if it's continuing to make new highs and to see if levels of support are holding. Now, if we look here on TJX on a 60-minute chart, right now it's sitting on the 50 EMA. Okay, came right back down to the 50. We had the gap up today. Okay, and what I'd want to see is the support hold. All right, and if it turns and starts to head back up, then you stay long. If it starts to falter, I take profits. And again, I know nothing about your position. You know, I'm just trying to generically tell you how I do it. Does that make any sense? Yeah, okay. And what I also do is, and again, I don't know when you put it on. Look, if I'm going to trade, if I'm going to buy options, okay, I'm going to buy them with at least 4 months of time, and preferably more like 6. Okay, this way I don't have to worry about all the squiggles in the market. Okay, when I sell options, I absolutely want to sell the front week of the front month. Okay, and I do that because, you know, I want to capture the fastest time decay curve possible. All right. Now, having said that, if I have a 6-month option, say I buy, you know, I'm looking to probably close them out when they get to within 2 months of that expiration. And then depending upon the situation, I may roll out and go out 6 more and roll the profit forward. Okay, he says, I'm sitting with 3K profit with 2 options, less than a month and a half. Do they have weeklies? Let's take a look here. TJX just isn't a company I really even look at. Yeah, okay, and now they don't have weeklies. Now, good for you. You know, you got a good trade then. Hey, look, you know, to me, and I say this all the time, deciding when to take a profit is a good problem to have, okay? You know, we all want those problems. You know, when you're sitting there and you have losses and now you're deciding when to cut your loss, you know, that's not the kind of problem we want. But as I said, what I'll normally try to do is I'll track it based upon a shorter term time period. And then I'll see if weakness is forming on the 60-minute. Okay. I mean, you know, we go back to TJX here. I mean, the daily's in a beautiful uptrend, right? The monthly's in an incredibly strong uptrend, right? And the weekly is in a nice strong uptrend. Here's your weekly. Let me scope out, put up 2 years here. So you have all multiple time frames in strong uptrends, okay? So what's going to happen is, you know, your 60-minute chart is going to be the first one that starts to falter. So I would go into the 60 and then I would just track my position to make sure it's still, you know, trading strongly. And you can see here, you know, on TJX, on the shorter chart here, how, you know, the 50 kind of held support. Look at it, 50 held support here, held support here, held it here. Now right here is the first time in what, 1, 2, 3, 4, really 4 swings that it actually punched through the 50 EMA. And as I said, now it's gapped up and it's sitting right around the 50. All right, so if it gapped up higher and then continued up, okay, well then you know it's most likely the odds favor it continuing in the bullish direction. If it gaps down, okay, you know, the 50 now becomes resistance. All right. So, you know, if it pulled back up to the 50 and couldn't get through it, and started to head down, you know, then that's the time to say, hey, you know what? Maybe it's time for me to take a hike with this deal. So that's how I do it, you know, and I'll track different stocks like that. Okay. Well, thank you. I'm glad I was helpful. You know, really the key, you know, there's two keys to me to beating the market. Number one is you need to have an overall frame of reference for the market, the overall markets themselves, okay? The second thing is you need to have some sort of a structure in terms of dealing with each individual stock that you're tracking or you're buying. And, you know, to me, the real key here is this part right here. And I'm going to show you on the video where it is. Where the heck did I put it? Right here. This here, right here, is the key. And I have a video on chart reading using multiple time frames. I mean, it's very difficult. It's a very difficult concept to grasp, okay? And most people do it wrong, all right? But you can, you know, and I thank you for mentioning TJX here because this seems to be the perfect example, okay? You know, here's a stock that's in a just powerful, powerful uptrend. And we know that vis-a-vis the fact that the daily's in a strong uptrend, okay? The 50's up, 50's heading up, right? We got a beautiful sloping upward 200, right, on the daily. And we have virtually the same situation on the weekly. All right, so ideally, you know, this is the kind of stock you want to come in and say, okay, you know, let's buy it. Now, let's buy it, you know, on a weakness and come in and, you know, just ride the wave. So it's the identification of the trends on multiple time frames that can help you get into decent deals. First Solar setting up. Okay, any other questions? But that's, you know, that's a good trade and good for you. USB is probably in the same bank. Yeah, you know what? USB, let's put that up because I was looking at that last week. And all the banks, by the way, have been kind of moving really strongly. But yeah, USB is starting to really move nicely. Let me put the 50. Put the 50 and the 200 back up. I use exponential, by the way, moving averages. Okay. You know, we look at this chart here of USB. Okay, look at the shake and money flow. All green, positive, has been moving up. Okay, here's the 50. Wow, where's the 50? 50's 35. Okay, here it is. 35 right here. It's the dash line. 35.46, the 200 gently sloping uptrend. Okay. As a matter of fact, even I think Bank of America is starting to. Bank of America just really started to move into an uptrend. I don't like these colors, so let me just change this. Make that red. Let's make that black. Okay, there we go. Now we might be able to see a little bit clearer. The 50 EMA on the weekly chart for Bank of America is 1314. 1326 is the 200. So it's getting very, very close here to crossing above it. All right, now, on the daily chart, you can see that it's well above it, okay? The 50 is this red line, and the 200 is the green line. So you can see it's well above it. As a matter of fact, here was an entry right there, 1450. So Bank of America has been in a really strong trend too, and all the banks have been, you know. Morgan Stanley, Goldman Sachs, and you can see Goldman just crossed up on a weekly basis back in May. And, look at this. You had one swing here, and here's another swing. Obviously a higher price stock, not a low price stock like Bank of America. Bank of America, by the way, has very, very weak weekly options. Does that make any sense? The premiums are really pretty poor. I mean, look at this. It's trading at 15.81 close today. The $16 call that expires this Friday is like 7 cents. That's nothing. So it's 20 cents out of the money. You can only sell them for 7 cents. GNC, okay. All right. Do you trade weekly options for weekly income? Yeah. Oh, I absolutely do. As a matter of fact, I kind of feel naked if I don't have a weekly option position going. But as I said, what I like to do is I like to do a weekly covered call, all right, and collect option premium against the stock. And, I know there are guys out there that like to do spreads on weekly stocks, which can be done. Okay, but my preference is actually to own the stock and sell a call against it on a weekly basis, preferably one that has weekly options. And the reason I like doing that is because, see, if you do a spread and you're wrong, you're going to lose money. Okay? If I own the stock and I sell a call and I don't get assigned, okay, I always have the ability to sell another option. So I'll continue to sell options. And I'll continue to sell. I'll go back in on the same stock, like you saw in the on the track record. Yeah, like you saw in the track record. I mean, we've done VHC a number of times. I just did it in this swing here. I got stuck with Cisco doing covered calls, meaning now you cannot find decent premium. Stock is going down. Yeah. The problem with Cisco is, to me, that wouldn't have been a stock that I'd be willing to do a weekly covered call strategy on, because quite frankly, their option premiums were really poor. It's almost like doing them on Intel. Intel's a behemoth, all right? And, if we look at it, if you look at Intel, it's trading at just under 24 bucks, all right? And look at the $24 call, weekly call, it's 6 cents. I mean, if I sold them, I'd be getting 6 cents for it. To me, that's not worth the risk. I want something with a little more meat and potatoes in it. And unfortunately, Cisco is in the same position. Okay, it's 21.25, right? The 21.5 is like 4 to 5 cents. That's nothing. When I say nothing, I mean when I can go out and I can do a deal on a stock that maybe like a Vernet, which I've done a number of times. The 1950. Let's look at Vernet and I'll compare it for you. If you look at VHC, the stock's right around 19. All right, the 19 call that expires Friday, you can sell for 40 cents. Compare that to a stock at 22 that you're selling, an option for 6 cents or something. It's just not worth it. Yeah, definitely. You pay more in commission trading a 6 cents option. Well, it's funny. I've done this before. I'll sell calls for a nickel, okay? And I don't think my broker even charges me a commission when it's priced at 5 cents or less. So I'll grab the premium, and I'll do that if there's, 2 days to go. I'll take the cash. It's like picking up a couple of bills off the floor. But Cisco, I guess I share your, I guess I can empathize with you on Cisco, because I had bought Cisco, and I was doing the same thing. I was selling options against it. The stock, crashed, came back up. Look, it hit a high of 67, 27, 26 here. I actually ended up making money on Cisco. But the reason I bought it was to sell options. And then, I start selling them, and I realized that I can't make any money here selling these options. So, I closed the position out once I had a profit. But again, if you look at Cisco here on a weekly basis, right, it's just gone into an uptrend. All right. Now, the question is, where's the stock at the bottom? All right. That's the million-dollar question. We've got this. Where my crosshairs are is probably where their last earnings report came out. Okay. And, you've got to lower that bar of 21.12. All right. So, if that support level holds, it's probably, here's your earnings, 2077. You can see it's trading right, still within the range of that area there. You had a huge selling climax, and and it's possible, they could start turning around and make another run. Yeah, Cisco's been getting kind of beat up here. But again, for the purposes of what we're talking about in terms of selling weekly options, I agree with you. It's absolutely not a candidate that I would have on my list. And I would include Intel in that same category. Okay. All right. Any other questions? Yeah, I mean, if you, oh, you're more than welcome. Yeah, one of the things I like doing too is I'll go into industry groups that, in my opinion, are beaten up. Okay. And then get some trades off in those groups. Like, to me, I was talking a while back, I said, to me, it looked like all the bulk shippers were setting up for a long-term bottom here. And I didn't recommend Eagle, but I had actually traded myself. I traded it during this swing here, and it topped at bottom. Now, as you can see here, last week we had if you're familiar with candlestick jargon, we had a hammer on the weekly basis, and now we're moving up. Okay, so take this off the screen. So I'll try to go in there on industry groups that are, really beat up. And if it looks like we're starting to get a long-term bottom, then, I'll go in, I'll trade them. And now, these particular stocks don't have weekly options, okay? So it's very difficult to go in there and collect weekly premium. But you can see where if you were in this area down here on Diana Shipping, if you had weekly options, you went in there, you bought the stock and just kept selling calls, yeah, at some point you're going to get assigned. But guess what? You're going to make money. Look at how long, this was what, about 6 months, 7 months, it kind of stayed in a tight range. And then we finally had the breakout here. So that's what I like to do. As a matter of fact, we were doing that with U.S. Steel. Okay, you can see steel here. We were going into steel all during this area, buying it, selling weekly calls, getting back in, doing it again. Then you see it dropped. And then again, what we have here, we had a major consolidation period for a number of months, and now it's just broken out to the upside. Okay, but, the interesting thing is, you can go in there and, when a stock has weekly options, you have the ability to go in there and just continue to collect cash premium. It pulls back, you get back in and do it again, and you put the trade back on. And guess what? Every time you get assigned, you're padding your account. That's what I like to do. And steel was a perfect example because it was setting up on a long-term basis, on a long-term bottom here. I actually, one of the stocks that I had recommended was Radian. And again, you can see where Radian, you know what, yeah, you really can't see it here, but let me put it up on a monthly chart. Now, if anybody's familiar with this company, they're a mortgage insurer, okay? So they got clobbered when the real estate market got clobbered. As a matter of fact, look at this. It hit a low in July of 08 of 69 cents, right? Ultimately rallied back to 18 bucks. Okay, about 2 years later. All right, and then of course it sold off, made the higher bottom. So I had recommended, we got into this really early. I recommended it up in here, which was a major mistake. But I told my members as this thing started bottoming, I just kept adding to it. I added to it. And, then as it started to get back above my cost, I was actually selling calls. And then I was getting assigned on the way up. Okay, and then you can see it hit 15 here. Now it's gone into like the sideways consolidation again. All right. But, my logic for this stock was that when the real estate market turns around, ultimately the stock's going to have value again. And, it's funny because I know there's a certain follically challenged pitch man on TV who started to recommend Radian. But, we were in it way before it even bottomed. But again, you can see how, when stocks start to bottom, you can go in there and you can start utilizing that strategy I'm talking about. And your risk actually becomes less, especially when you're offsetting your cost with call premium. So, oh, cool. I appreciate it. Thank you very much. Yeah, look, I recognize, look, it's very difficult in this business, by the way, because, not everybody enjoys everybody's trading style. You really have to be in line with the style. What I find is I try to share, techniques and strategies and tactics that I've learned over the years that work. And then, obviously, you're free to just listen and follow my alerts, but which many members do, by the way. But then, the other opportunity that I offer that avails itself is that there are other special tactics and strategies that a lot of people don't share. Okay. For example, specific support resistance levels on the overall market. I don't think anybody gets that concise in terms of the levels that I share. And as a matter of fact, in today's update, I was cautioning again people that, 1812 is very critical right now. We're at a very critical juncture in the market, and it's not prudent really to turn around and start, throwing money at the market until we get a confirmation one way or another. Okay, well, good luck. I look forward to seeing you in the membership, Natick. Thank you. I'm glad I appealed to you. But I do recognize that, and you know, and the other problem I have with this whole game, quite frankly, is that you know, I've actually gone to very, very expensive seminars, and you know, I find it really disturbing that, you know, people are charging these ridiculous amounts of money, you know, on very unsuspecting people. And, you know, it's always been kind of a pet peeve of mine. I mean, I actually attended a live seminar that cost the gentleman about $17,000. And, you know, quite honestly, I was really appalled as to what they were teaching people. I found it mind-boggling. I'm like, you're charging this kind of money? And, you know, not only that, but, you know, they're giving people the illusion that they can, you know, make millions of dollars very quickly in the market. And as you know, beating the market takes a lot of work. It's not easy. If it were, everybody would be sitting on the beach, okay? But, you know, I feel very proud of what I'm able to share. I'm very proud of my track record, so, you know, it speaks for itself. You know, the question is whether or not, you know, you're in alignment with the philosophy and the teachings that I share. At any rate, so much for that topic and my philosophical rambling here. But anyway, look, I want to thank everybody for being here. And if there are any questions, I will, you know, be more than happy to keep the webinar open here for a few minutes longer. We're kind of running on an hour and a half. So I will close it out at 6 o'clock Eastern time. But if there are any questions, please shoot them through and I'll be more than happy to answer them. Yeah, this workday is up 8% now. We're starting to wind down the earnings season, by the way, so there's still a couple of decent companies reporting. Hewlett-Packard reports tomorrow. Well, you know what? I don't see any questions, so I'm probably going to close down. I appreciate you all attending, and again, as I said at the beginning, happy Thanksgiving to those here in the U.S., and I really appreciate you being here. Thank you, and may God bless you. Good night.